Hello everyone and welcome to Rajput, Jain and Associate. In this video, we will discuss about how GST ITC scam is done, what are the reasons behind these scams, and what measures government is planning to take to curb such cases. So the Director General of Goods and Service Tax Intelligence across the country has arrested many people and booked many entities in cases for illegally availing or passing on input tax credit by using fake GST invoices and causing loss of the exchequer. Tax officials said the use of fake invoices to wrongfully avail ITC credit has been gradually increasing and has become a concern for the government, especially at a time when revenue collection is depressed. So, what is a fake invoice? In general, fake invoice refers to an invoice which does not comply with the provisions of the Act and the rules. In simple terms, when a registered person issues a tax invoice without actual supply of goods or service or payment of GST, then such an invoice is presumed to be a fake invoice. As a matter of fact, the GST charge on those invoices is neither paid or nor intended to be paid. The fake invoice frauds are largely carried out by using a network of firms that are set up to absorb input tax credit illegally. In fake invoicing, one party is issuer of invoice and the other party is the beneficiary. Sometimes the beneficiary might be a genuine one. Even then, the beneficiary can be made answerable for the department. Now, let's take an example for it. For example, company A comes to a genuine trade with company B, but most of the transactions of company B are fake invoices. Then, the company A would also have to face certain consequences for the offences that are to be made by company B. Further, the Act has provided certain provisions which need to be satisfied by the supplier to claim input tax credit. So, in order to claim ITC under CGST Act 2017, there are certain requirements. First one is the possession of tax invoice, a debit or a credit note, or a supplementary invoice that is issued by the supplier. Second one is the said goods or services must have actually been received by the recipient. Third one is the return for the said supply must have been filed. And fourth one is the tax charge shall be paid to the government by the supplier. Lastly, matching of the invoices and reversal of ITC. So when the registered person claim ITC of the invoices which do not satisfy the eligibility criteria as per the Act, then the said invoices are considered as fake invoices. The whole process of fake invoices begin with the making of bogus or shell companies which are generally created in the names of peons, drivers or some other workers. These companies are eventually closed within limited period of time without the payment of actual tax liability. Now let us understand this whole concept with an example. For example, Mr. A issues an invoice against a supply that is made to Mr. B, and for this there is no actual supply of goods and services. So in this case, Mr. A does not pay tax to the government or a minor amount of tax liability is paid by Mr. A. This just shows the invoice in GSTR 1. So Mr. B is able to claim the input tax credit in respect of the such supply being auto-populated in GSTR 2A. Now, Mr. B would again issue invoice to Mr. C, but now Mr. B pays tax because Mr. B has ITC in its credit ledger. So consequently, C would also be liable to claim input tax credit. So all of these firms are the part of the same network to take illegal benefit of input tax credit, and hence it is very difficult for the GST department to prove Mr. C as fake invoicing, as he has taken invoice from Mr. B and Mr. B is an absolute tax compliant person. So ultimately we can very well see that the defaulter Mr. A is a shell company, but the same cannot be identified by the department. Now next we come on to the types of the fake invoices cases in GST. These can be fake and bogus invoices, fraudulent refund on exports that are based on the fake invoices, fraudulent refund of accumulated ITC without supply of goods and services. So next we will discuss why do companies get involved in fake invoicing. So these can be for the bank overdraft facility or to overcome their NPA status or to increase their turnover for higher valuation to their investors or for furnishing false information or falsification of their financial records or fake accounts and documents with an intent to evade payment of income tax. Then it can be for siphoning of money by their owners or to avail export refunds and other ITC benefits, and lastly for encashment of accumulated income tax credit. So the question arises, how does the detection of fake invoices is done by the department? First is the multiple registration for single PAN and the common registration detail or incorrect or fake addresses that are given on the GST portal. Then can be the report of non-filers of GSTR1 and GSTR3B and the persons who are purchasing from these non-filers. Then can be a report of non-filers of GSTR3B who only filed GSTR1. Then a report of mismatch in HSN-wise sale and purchase, mismatch between the volume of goods that are transacted in GSTR1 and the e-way bill that are respectively generated for the said supply. Then comes the high value transactions that are made by some newly registered person. Then the substantial payment of tax through ITC only. Then the report of export refund cases who are suspected as bogus. The HSN report of taxpayers claiming ITC of those goods or services which are not connected to business. So the question arises, what motivates the fraudsters to use fake invoices? So fake invoices are used because it is not only help evade GST on the taxable output supplies by availing the undue ITC and converting excess ITC into cash, but also helps in inflating their turnover using these invoices, booking fake purchases to evade income tax, diversion of funds and money laundering. So according to the official data that was published in 2018-19, the CGST authorities registered 1602 cases of fake ITC involving an amount of 11,251 crore and arrested 154 people for the same. Between April and November 2019, the authorities booked over 6,000 such cases. Now next come, what is the reason for such a surge in these cases? So according to tax officials, one of the primary reasons for an increase in companies availing ITC fraudulently is the lack of due diligence during the GST registration. The process of registration was made quite easy and hassle-free by the government so that the businesses could be easily on board to the system. However, this meant that a number of dummy companies to obtain the GST registration in the absence of scrutiny or physical verification of the registered address of the companies. Apart from this, officials said lack of data exchange among the enforcement agencies and the banks have also led to increase in fraud cases. It was very well said by an officer that the existing GST system needs to be more robust to detect such frauds. Now, will the tax department be able to recover the money from the fraudster? So the tax officials who spoke on the conditions of anonymity said in these cases recovery of money is unlikely as the money has already been siphoned and the companies involved in the fraud are only on paper with very little or no assets. So how is the government planning to curb these cases? So the government is planning to tighten the GST registration process and legal measures to deal with the rising cases of fake invoicing. Last month, the Government Legal Committee of the GST Council met to discuss the tightening of the GST registration process and work out other legal measures including necessary law amendments required in the GST Act. Apart from this, the Directorate General of Analytics and Risk Management, the data wing of GST, has identified and issued a list of 9,757 companies that have either issued or availed fake ITC across the country between July 2017 and March 2020. So this was all about the various aspects of GST ITC scam. For more information, contact Rajput, Jain and Associates. Thank you.